Welcome to Charts Today. My name is David Linton, and today's edition for Monday, the 28th of February, comes to you from London. And a busy morning this morning. Of course, all events kicking off with the Russia-Ukraine situation, and the ruble collapsing this morning. But no big surprises there, because we've been talking about these targets for a while now. These were generated over a year ago. 104, 108, and this morning we're at 100. And these targets were given back at 75. No one would believe the currency could move that much then, but that's what happened, and you can't ignore the targets. Busy morning for me. It's a bit like triple witching this Monday morning, because I've got my daily energy report out, the week ahead report out, and most of all, the monthly report covering all the global markets. So I wrote this for clients on the weekend. It's 101 pages long, around 400 charts, and covers these 90 plus instruments. So quite a big amount of work for clients once a month. And our global outlook, remembering that the italics is our high conviction calls. The bold is the change. So you'll notice here a lot of red kicking in on global stock markets. And we've got all the trends and targets, of course, given in the report. Tech looking especially bad. Interestingly, in terms of currencies, government bonds, energy, metals, commodities, very little change. So really interesting that these reports are written once a month. Not much has changed in the last month in terms of the outlook, other than for stocks and tech stocks especially. But all the bonds calls pretty much the same, and the same for most of the commodities. A few just turning a bit more bullish, but on the whole, little change there. Coming back to looking at the markets, the dollar is up 0.5%, tends to be a beneficiary in times of uncertainty. We've been saying dollar strength for 2022 is going to be a feature, and euro weakness, therefore, also a feature. Some very big downside targets for the euro, so quite scary if we start to make new lows there. Sterling looking lower against the dollar as well. A stronger dollar is going to be very much the theme this week. Sterling stabilizing a little bit better than the euro, having fallen away the middle of last week. So we are just seeing that there. And against the euro, we're pretty static, just sitting below that 120 level. Bitcoin sitting at $38,000, really just steady. Seems to have found a bit of a floor. Of course, we're looking for cloud support here before moving again. If we go lower than that low last year, we deactivate the 83,000 target. The S&P 500 index recovered quite strongly on Friday, but of course, all we're seeing here is lower lows and lower highs. So even though we're seeing a recovery, we are still bearish on all on the medium and short-term charts. But the long-term charts, now that we've activated these downside targets, you can see that we will fall through the cloud, because we've got activated downside targets pointing us to the chart levels. And of course, that's outlined in the report. The NASDAQ has got 28% downside on that target, so looking pretty grim there. And if we look at the futures today, down 1.5% on the S&P future, and on the NASDAQ future down by a similar amount. So US markets are going to open lower. The VIX volatility is up 20% to 33. Remember, we always say that if we're in the 30s, that's bullish. That's bullish for the fear index, so bearish for the market. So we're seeing the VIX volatility pushing higher, got chart targets much higher into the 50s, and that would be that'll be a 2-year high for the VIX, last seen in the pandemic. So that uncertainty creeping in, markets are fearful. FTSE future down 1.4%. The DAX in Germany, of course, more likely to be hit harder by the Russian sanctions. The DAX falling below that 15,000 mark. That was really critical support. We broke that. We're looking to downside targets now on the DAX. The same for the CAC, down 3%. Japan actually bucked the trend slightly, but is still bearish on those medium and short-term charts. And if we look at the Hang Seng, it was down slightly. Asia actually was fairly sanguine about this, but of course a lot of these sanctions are kicking in this morning in announcements, and the Ukrainian situation uh, is obviously evolving, and markets, each time we get news flow, the markets are reacting. The Sensex up 0.7%, so it again bucked the trend, and the Aussie market actually strong. Of course, the resource-laden Aussie market, and in fact, in our report, the Aussie market was the only one which we couldn't really call a downside on. It doesn't have an activated downside target, so that was really why. But of course, if markets start collapsing, it's hard to see how Aussie would be immune. We will look at the energy mix in a moment. Just looking at some of the soft commodities, and these are all covered in the report. Coffee just continuing that really steady uptrend. Down this morning, but and short term we're below the cloud, but the medium and long term trends are really clear. Sugar less so, falling off the top here, and bearish on the medium and short term charts. Wheat up 6.5%. Of course, Ukraine and Russia both big exporters of wheat, and that's having a really massive impact on the price. But these targets have been in place for ages, and we've talked about them before, so no big surprises there as well. Corn up 3.7%, also affected by that, of course. Gold back above the $1,900 mark. You remember several weeks back we were saying above 1,800 bullish, below 1,800 bearish. We're now saying that for 1,900. 1,900 is the new critical level, and of course we've got long-term upside targets to 2,400. Those are now activated. That's where we're going longer term. Silver sitting at $24 and having held that 2250 level, starting to look like it will motor again. We've got work to do to really break, and really it's a move above $30 and silver will rocket. Platinum and palladium looking stronger, and certainly versus a month ago in the report, now looking stronger. US 10-year yields falling back to 1.91%. That's quite interesting. We're just seeing the feeling that the Fed may not now raise aggressively, with the specter of an economy that's potentially going to struggle. Looking at Apple, the strongest of the bad bunch, really, but almost certainly this downside target will be activated. That's 25% lower, and all the other tech stocks have got downside targets that are pretty much activated. Looking at Brent crude this morning, we're sitting at $103. Everyone will know by now that on the 18th of January, we said to clients $150 for crude oil. That's just too unbelievable for most people, but that's the target that was in place then, and that's the target we're sticking to. So a further 50% rise in oil prices is what we're predicting. It may take time to play out, but that's the targets we're seeing. We've got a target here of 104 this morning on the 1-minute chart, 118 if we break above the 105 level, 118 is the next level, and 117. If we break above 103.43, we activate 118 here as well. So we really are seeing big upside moves here. Crude oil really is going to motor. Looking at US nat gas, that's looking more bullish as well. We've got upside targets here. Keep an eye on those 1-minute charts. And coal looking strong, sitting at 142. 150 was the target we gave for coal. That is where we got to. We've now got a new, bigger upside target. Keep an eye on those charts. The really big one is emissions. That's down this morning, down 7%. A lot of people in the market saw it as a foregone conclusion that emissions would go much higher. Well, that's actually not playing out, and we are seeing downside targets, and we made our bearish call to clients first thing this morning on emissions, and they've since fallen quite heavily. Gas markets, we've called neutral because it's just really hard to, in this volatility, see where they'll go. The trend is generally up, so we shouldn't be surprised to see big moves to the upside. So on the whole, we are seeing a bit of a retracement. We're up 15% on gas prices this morning, but very hard market to call and trade in at the moment. We're seeing a lot of volatility as events unfold, and TTF much the same. German power sitting at 149.50, did touch the 180 mark, which we predicted last week, but we've pulled right the way back. Of course, if we go higher than 180, that would be very, very bullish. So it'll be interesting to watch this. Keep an eye on your OTC charts on your Trayport screens for that. That's it for today. Until tomorrow, happy charting. See you then.